The story you're about to hear doesn't begin on Wall Street. It begins on a sprawling Texas ranch, owned by two brothers who believed they could rewrite the rules of global finance. Their names were Nelson Bunker Hunt and William Herbert Hunt, heirs to one of the largest oil fortunes in American history. They grew up surrounded by wealth, power, and the firm belief that the world was divided into two types of people: those who controlled markets and those who obeyed them. But what no one knew, certainly not governments, banks, or traders, was that these two brothers were about to attempt one of the boldest financial plays the world had ever seen. Their idea was dangerously simple: buy so much silver that they could control its global price. What started as a hedge against inflation turned into a financial earthquake that shook every market on Earth. And in the end, their ambition would expose just how fragile the world's economic systems really were. To understand how they fooled the global market, we need to understand what the Hunt brothers feared. The 1970s were a decade of chaos: oil shocks, rising inflation, political turmoil, and the end of the gold standard after 1971. What happened between 1973 and 1980 is fully documented by the U.S. Commodity Futures Trading Commission, the Federal Reserve, major newspapers like the New York Times, and the London Metals Exchange. This is the verified and factual story of how Nelson Bunker Hunt and William Herbert Hunt, heirs to a massive oil empire, attempted to corner the global silver market and almost succeeded. Their plan was bold, simple, and incredibly risky: buy so much silver in such massive quantities that they could influence its global price and create a financial fortress against inflation. When they began buying, silver was cheap. But by the time the world realized what was happening, these two brothers held one of the largest private silver stockpiles in history. Their actions didn't just shock bankers and governments, they nearly rewired the global financial system. To understand why the Hunts targeted silver, you need to understand the economic chaos of the 1970s. The United States had just abandoned the gold standard in 1971, meaning dollars were no longer backed by gold. Inflation surged, oil prices spiked, confidence in the U.S. economy collapsed. Money was losing value so quickly that investors desperately searched for something solid. The Hunt brothers, already deeply wealthy from their family's oil empire, believed the U.S. dollar was on the brink of failure. Their worry wasn't irrational. Inflation reached almost 14% by the late 1970s. Gold was heavily regulated. Foreign currencies were unstable, but silver was different. It was a physical asset, historically valuable, used in electronics, medical instruments, and jewelry. It had global demand and limited supply. And unlike gold, individuals were free to buy it without the same restrictions. The Hunts saw silver as the perfect weapon against inflation, a place to store billions of dollars of value. What began as protection soon became obsession. By the mid-1970s, this was no longer a simple investment. The brothers wanted control. Their strategy was straightforward, but its scale was unprecedented. The Hunts began buying physical silver bars, coins, anything they could store. They used private jets to move silver across the world. They stored it in Swiss vaults. They hired armored trucks to transport shipments weighing tons. By 1974, they had accumulated more than 50 million ounces of silver, according to official records. But even that wasn't enough. They began purchasing silver futures contracts on U.S. exchanges, like COMEX, contracts that allowed them to control future deliveries of silver without physically holding it yet. Their position grew so large that traders started whispering about a mysterious new force dominating the market. What no one knew was that this force was not a corporation, not a government, not a group of investors, but two brothers who believed that if they bought enough silver, the world would eventually be forced to buy it from them at any price they demanded. It was a financial gamble so large, so aggressive, that even bankers in London and New York were stunned. By 1979, the brothers controlled roughly 1/3 of the entire world's supply of privately held silver, more than 100 million ounces, confirmed by CFTC records. This was not a fantasy. This was not a rumor. This was a historic attempt to corner a major global commodity. The price of silver began to rise. It climbed from around $6 per ounce to more than $15, then $20. 5 traders, investors, and ordinary people rushed in, thinking they were witnessing a once-in-a-lifetime boom. The news media called it the Silver Rush. Jewelry stores raised prices. Industrial companies panicked as their costs skyrocketed. Even countries like India and Mexico major users of silver, watched nervously. And at the center of this storm stood the Hunt brothers, quietly celebrating what seemed like unstoppable success. For them, the rising price meant billions in profit. On paper, but more importantly, it meant real influence over a market that powered industries across the world. As the price rose, the brothers expanded their purchases. They borrowed money from banks, used their current silver holdings as collateral, and doubled their position. They brought in outside investors who trusted the Hunt's vision, creating alliances that made their position even stronger. For a brief moment, they had become the single most powerful force in the global silver industry. This was no longer an investment strategy. It was economic warfare. Their purchases pushed silver to nearly $50 per ounce by January 1980, an increase of more than 800% in less than a year. Some newspapers claimed that the Hunts were trying to create a new silver-backed currency. Others speculated they wanted to escape inflation by holding a metal the U.S. government could not print. Whatever their long-term vision was, one thing was certain: the brothers had successfully fooled the global market, making traders believe that demand was natural when, in reality, it was driven by two individuals using unimaginable amounts of borrowed money. But when a market rises this fast, governments start paying attention. Regulatory agencies grew suspicious. COMEX and the Federal Reserve began investigating why silver was rising so rapidly. Banks that had loaned money to the Hunts grew nervous. If the price of silver fell, the brothers would not be able to repay their loans. Finally, in January 1980, COMEX changed the rules. They announced that traders could only sell silver futures, not buy new ones. This single rule change instantly ended the Hunts' ability to increase their position. The brothers were trapped. Their power depended on constant buying. Without it, the price began to fall. Slowly at first, then rapidly. Panic spread through the market. Investors who had followed the Hunts rushed to sell. Silver dropped from $50 to less than $20 in just a few weeks. What had taken years to build collapsed in days. On March 27, 1980, the day now known as Silver Thursday, the price fell so far and so rapidly that the global financial system began to tremble. The Hunts received urgent calls from brokers demanding more money to cover their losses. They didn't have it. Their loans were too large. Their silver was losing value too quickly. Banks feared they might collapse. The Federal Reserve stepped in to prevent a wider financial crisis, helping coordinate emergency loans to keep the system stable. The Hunts, once among the richest families in the United States, suddenly faced billions in debt. Their silver empire had evaporated. They were forced to liquidate assets, sell land, and surrender control of their fortune. The brothers who had once dreamed of controlling a global market were now fighting to avoid total bankruptcy. Silver Thursday became one of the most dramatic collapses in modern economic history. In the aftermath, investigations revealed the full scale of the Hunts' operations. Newspapers published detailed reports. Congressional hearings examined how two individuals could accumulate such enormous control over a crucial global commodity. Regulators strengthened rules to prevent any single trader from dominating a market again. The Hunts insisted that they never intended to cause harm, that they simply wanted to protect their wealth from inflation. But the truth was more complicated. Their actions distorted prices worldwide, their borrowing created massive instability, and their collapse revealed just how interconnected global markets had become. A single decision by two individuals with enough money and enough confidence could shake the entire global financial system. The Hunt brothers' attempt to corner the silver market remains a powerful lesson in economic history. It proves that markets are not just numbers on a screen. They are fragile structures built on trust, regulation, and balance. When one part of that system becomes too powerful, the entire structure is at risk. The Hunts seemed invincible while silver rose. They appeared unstoppable as their fortune multiplied. But markets built on artificial demand cannot survive forever. When the new rules hit, their strategy crumbled instantly. Their story shows how greed, fear, and ambition can combine into a financial disaster. It also highlights the importance of regulation, the role of central banks, and the dangers of excessive leverage. As the dust settled, the silver market slowly returned to normal. Prices stabilized, investors recovered. But the Hunts' legacy remained a cautionary tale. The brothers who once believed they could outsmart the entire global market ended up proving exactly why no individual should have that much power. Today, Their story is taught in economics classes, discussed in financial documentaries, and analyzed by historians who see it as one of the clearest examples of what happens when wealth, ambition, and market manipulation collide. And although decades have passed, the lessons are still relevant. Markets can still be manipulated, crashes can still happen, financial systems are still vulnerable. But thanks to the Hunt brothers, the world is far more aware of the dangers. Their story, dramatic and unbelievable, yet fully real, shows how close the world once came to a financial disaster caused by just two people who thought they had found a way to control an entire global market.